Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back. Let's take a look again on the gold market. So market in recent couple of weeks enjoys by positive performance. You can see indeed once this reversal candle has been formed last week, we considered taking a long position. Overall performance stands very nice, and so market has passed approximately $70 per contract. There's upward action. In general, with this new fundamental environment, in general, it stands common not only to the gold but to the forex market as well for stocks. So, the major points of this environment is that Fed keeps rate low. They consider the rising of the interest rates mostly as a speculative activity, not as a real reflection of the inflation that stands currently in the economy. So, Fed treats this upward action on interest rates just treats as a temporal, and overall pace of the inflation should be slower. Second, we could see the corresponding reaction on the interest rates that is dropping currently provides additional support to the gold. But at the same time, fundamental analysis currently shows that this bullish sentiment is relatively fragile currently on the gold. Why? Because first of all, analysts, investors take a look at the gold performance through the prism of the interest rates. So it means that it's not quite independent price behavior that's driven by inner driving factors of the gold market particularly. But this is mostly as a byproduct of the dropping of the interest rates, weaker United States dollar. That is, we're now standing to our target 87.4. Second moment is that if you'll take a look at Committee of Traders report, you will see that yes, it seems that the open interest is rising and speculative position was increased as well, but it was not absolutely pure increasing of the bullish positions, because in a row with the bullish you could see that bearish positions have been increased as well, and hedgers haven't opened a lot of positions against the gold appreciation. So this positive dynamic is also mixed. Finally, third moment is the economy cycle. So currently there's no doubts about whether we are in a new bullish environment for global economy or not. Currently, there's no doubts, no questions about this, because overall wide statistics shows that indeed it stands so. And putting it all together, it tells you that current bullish environment definitely is a temporal on the gold market, and we should treat it as a retracement. Currently, it totally corresponds to our long-term view, as we expect that the United States economy stands at the eve of the booming stage that should start within a few months. And that is the time for gold to show upward performance, but this upward performance should be limited. We think that it should be some kind of a swan song before starting on the new bear trend on the gold. So that's currently what we have on the fundamental background. Still, as gold still has 2 or 3 months probably of the upward behavior, we are considering this scenario on the daily and lower time frame charts. So on the daily chart, you could see that unfortunately gold wasn't able to hit our predefined level. So initially we thought and we were watching for a reaching of the 1805 target, because that's multiple targets, not only on the daily XOP, but it's also on the 4 time frame chart. OP target stands in the same area, and we were hoping that the market will hit it first before some reasonable pullback will start. But you can see, unfortunately, gold was not able to break through the confidence area to break the 18 even level, and shows the pullback to the downside. Currently, investors talk about the possible breakout of the 1.5 area on interest rates. So you can see this is the important support area on interest rates. And in today's comments, we see some thoughts that probably it could happen that market could drop a bit lower. But this downward breakout is nothing really curious, because if we'll take a look at the weekly chart, this is our major ABCD pattern, and you can see this is the first upward bounce after long-term bearish trend. It means that the deep retracement, even back to the one even level, it's normal pullback, and that should support gold in a short-term perspective. On the intraday charts, you could see that market still calling in tight range, shows no significant performance on Friday, but still, as you could see, market has formed a bullish grabber here, suggesting that some strong upward action could happen. And on Friday, you could see this rising of interest rates. That makes impact on the gold as well. So you can see gold market also starts dropping here. So for our strategy, it's crucial to see that market keep the bullish context. And for that purpose, market has to stay inside of this upward swing. It will be preferable if market will stop retracement at some significant support area, but our vital area, ultimate edge, let's call it in this manner, is 1723 lows. So breakout of this area will turn the context into bearish. While market is flirting around and stands inside of this swing, it keeps theoretical chance on upward continuation. So as we see some bearish signs and short-term bearish signs in the intraday charts, on Monday we are not to be hurried with the taking the long position, and mostly will be watching for the shape of the retracement and clarity on the potential target of this retracement to the downside. Once we will get it, we could consider particular levels where we could think about taking the long position in the gold market. So on the follow time frame chart, unfortunately, our three drive pattern has not been formed. Market wasn't able even to form the butterfly. Instead of the butterfly, you could see only was able to form the cartridge triple to buy pattern. Here, say BCD retracement down, OP already has been reached. But as we said, on on interest rates, we have bullish grabber. It suggests stronger upward action on interest rates. Here we also see more or less strong sell-off to the downside. It seems that market could reach not only 1770, but also it could drop somewhere to the 1750. Because this is strong confidence support, as you can see, and this is previous top. This is perfect area to us to consider possible taking the position, because it will be, well, it will be preferable to gold to stay above it, and since it's a strong support, it's relatively safe making an attempt to buy gold up from here. One thing that we should avoid is just straight downside nasty black candle. If it will be formed with a downside straight action, of course we should stay aside and do not take any position. If it will be gradual action, something of that sort, that will be great. So additionally, here we have, as you can see, some divergence with the MACD, and on the hourly chart it might be the hand and shoulders. So because take a look, here is the sell-off relatively strong, so market should reach 1760. This is, by the way, potential neckline. It will be also XOP with this minor ABCD pattern. You can see 1760 stands as well. And if we are correct on this potential butterfly, hand and shoulders, it means that its target will be somewhere to the 1750. That fits perfectly to confidence support area. So that's what we intend to keep an eye on Monday, on Tuesday, probably in 2 weeks. Also, don't forget that next week we will get the Fed meeting, and it's also make an impact on the overall performance of the markets. But currently, overall technical picture stands so that gold keeps short-term bullish context, now stands in a bit deeper retracement, despite that market hasn't reached the 1805 target last week. Nothing is done here yet, and market keep chance to reach it after the retracement will be over. Currently for us, the major task is to estimate the precise target of this possible retracement. And then in the first glance that we see currently, it seems that 1750 area is just perfect to consider possible taking the long position. As overall behavior, as on interest rates, as on the gold, suggests that it might happen another downside swing before market turns to the upward direction again.